The United States government just made a move that could change the game for Bitcoin forever. With a single executive order, they've created a strategic reserve for their massive Bitcoin holdings, officially becoming the world's biggest state sponsored Bitcoin whale. No, this is not a drill. This isn't a test. This is a fundamental shift in the global financial landscape. For years, governments, especially the United States, treated Bitcoin with a mix of suspicion, confusion, and sometimes outright hostility. They saw it as a tool for criminals, a speculative bubble, and a threat to the financial system. They seized it from bad actors, auctioned it off, and generally tried to keep it at arm's length. But that era is now officially over. The most powerful government on earth has publicly declared that it will HODL Bitcoin as a permanent national asset. What happens when the government that controls the world's reserve currency decides to hold the world's most disruptive digital currency as a strategic asset? What does it mean when they explicitly state they have no plans to sell? And how will this radical new policy shift the global balance of power? In this video, we're going to break down the executive order that made this all happen. We'll uncover the wild story of how the US government secretly ended up with one of the largest Bitcoin treasuries on the planet. We'll analyze the seismic implications for Bitcoin's price, for big money adoption, and for the geopolitical chessboard. And most importantly, we'll explore what this means for you, for every person who owns or is thinking about owning a piece of the Bitcoin network. The game has changed, and you need to understand the new rules. It all went down on March 6th, 2025. In a move that sent shockwaves through the crypto and traditional finance worlds, President Donald Trump signed a landmark executive order, the establishment of the Strategic Bitcoin Reserve and United States Digital Asset Stockpile. This wasn't some vague policy statement. This was a formal, legally binding directive that completely redefines the US government's relationship with digital assets, especially Bitcoin. For decades, the United States has kept strategic reserves of critical resources. There's the Strategic Petroleum Reserve, built to protect the economy from oil shocks. There are legendary gold vaults like Fort Knox, which back the perceived strength of the nation's finances. With this executive order, Bitcoin has officially joined that elite list. The order does two main things. First, and most importantly, it creates the Strategic Bitcoin Reserve. This is the big one. The order tells the Department of the Treasury to set up an office to manage all of the government's Bitcoin, and the text is crystal clear. Bitcoin in this reserve is to be treated as a permanent national asset. Here's the most powerful sentence in the whole document. Government BTC deposited into the Strategic Bitcoin Reserve shall not be sold and shall be maintained as reserve assets of the United States. Let that sink in. The US government has basically created a Bitcoin black hole. The coins go in, but they don't come out. The only exception is for extreme crises, and even then, it would require direct presidential approval. For all intents and purposes, the United States has adopted a national strategy of holding Bitcoin indefinitely. The second part of the order sets up the US digital asset stockpile. This is a separate bucket for all other cryptocurrencies the government has seized. Think Ethereum, Solana, XRP, and others. The policy for these is different. While they won't actively acquire more, the Treasury can manage and potentially sell them off over time. This distinction is crucial. The government isn't saying all crypto is a reserve asset. It is specifically singling out Bitcoin. It's making a clear, calculated bet that Bitcoin and Bitcoin alone has the qualities of digital gold, a secure, scarce, and reliable store of value fit for the nation's balance sheet. The order even points to Bitcoin's 21 million hard cap and its unhacked protocol as key reasons for this decision. Furthermore, the order demands a full accounting of all digital assets held by every federal agency, from the FBI to the IRS. For the first time, all these scattered holdings will be brought under one cohesive strategy. The days of different agencies doing different things, some holding, some auctioning, are over. There is now one policy dictated from the top: HODL Bitcoin. To fund this reserve, the order is explicitly budget neutral. It doesn't use a single taxpayer dollar. Instead, it's funded entirely with Bitcoin the government already owns from years of criminal and civil forfeitures. And while taxpayer-funded buying is out, the order tantalizingly authorizes the Treasury and Commerce departments to develop budget-neutral strategies for acquiring additional Bitcoin. This opens the door to future acquisitions, maybe by trading other seized assets, or, as some have even suggested, selling off a bit of the nation's gold to buy more Bitcoin. This executive order is the starting gun for a new financial era. It's arguably the single biggest piece of validation in Bitcoin's history. The government isn't just regulating Bitcoin anymore, it's adopting it. So, the United States is now the world's biggest Bitcoin whale. But how on earth did a government that was, until recently, so skeptical of crypto manage to build a treasure chest of around 200,000 BTC? The story is like something out of a movie, complete with dark web kingpins, international hackers, and some of the largest financial seizures in history. The US government didn't buy this Bitcoin on an exchange. It took it. The huge majority of its holdings, estimated to be between 198,000 and 207,000 BTC, comes from criminal forfeitures. That's a stash worth tens of billions of dollars depending on the day's price. The most famous chapter in this story is the saga of the Silk Road. For those who don't know, the Silk Road was a notorious online black market on the dark web run by Ross Ulbricht, aka Dread Pirate Roberts. It was the Amazon of illegal goods, and Bitcoin was its currency of choice. When the FBI finally shut down the Silk Road in 2013, they didn't just arrest Ulbricht, they seized the market's assets. But that wasn't all. For years, a hacker known as Individual X had been siphoning off a massive fortune from the Silk Road. In a wild turn of events, authorities tracked down and seized this hoard of nearly 70,000 BTC in late 2020. They found the Bitcoin on a hardware wallet hidden inside a popcorn tin in a bathroom closet. You can't make this stuff up. That one seizure shot the US government's holdings into the stratosphere, but the Silk Road was just the start. Another huge chunk of the government's Bitcoin came from the 2016 Bitfinex hack. In that heist, hackers stole nearly 120,000 BTC from the crypto exchange. In February 2022, the Department of Justice announced it had cracked the case, arrested a quirky New York couple, and seized over 94,000 BTC, the largest financial seizure in DOJ history at the time. These seizures have made law enforcement agencies around the world experts at following the money on the blockchain. For instance, Chinese authorities seized a massive 194,000 BTC from the Plus token Ponzi scheme, making China the second largest state holder of Bitcoin. For years, the US Marshal Service would periodically auction off its seized coins. They sold off nearly 195,000 Bitcoin over the last decade for what now looks like a pittance, just $366 million. If they had simply held on to that Bitcoin, it would be worth tens of billions today. This is the critical backstory for the new executive order. The government has finally learned its lesson. It has realized that in a world of endless money printing, it has been sitting on and selling off one of the hardest assets ever created. This new policy is a direct admission of that past mistake. It's a recognition that the Bitcoin they seize isn't just digital contraband to be dumped. It's a strategic national asset to be secured and held. The treasure chest is no longer for sale. It's being moved into a digital Fort Knox. For more than a decade, Bitcoin has been on a long, tough journey from the internet's fringes to the financial mainstream. It's been a battle for legitimacy, fought against a wall of skepticism from banks and governments. This executive order isn't just another step in that journey, it might just be the destination. It represents the ultimate validation of Bitcoin as a legitimate strategic asset. Think about the narrative that has powered the Bitcoin space for years. The idea that eventually institutions and governments would have no choice but to adopt it. It was a story of first they ignore you, then they laugh at you, then they fight you, then you win. Well, we are now firmly in the then you win phase. The United States government, the issuer of the world's reserve currency, has officially switched from fighting Bitcoin to embracing it. What does this signal to the rest of the world? For every bank, hedge fund, and corporate treasurer on Wall Street, the message is loud and clear. Investing in Bitcoin is no longer a career risk, ignoring it is. For years, big money investors have been hesitant, held back by regulatory uncertainty. This single action vaporizes many of those concerns. If the US government, with its unparalleled access to intelligence and financial expertise, has deemed Bitcoin worthy of being a national reserve asset, how can a CEO or fund manager justify zero exposure? They really can't. This move provides an implicit government endorsement that could open the floodgates for institutional capital. It's a green light of the highest order. This isn't just about price, though. It's about a fundamental reevaluation of the asset itself. Bitcoin is no longer just a speculative bet. It's now officially recognized by the US as digital gold, a tool for wealth preservation and a hedge against the very inflation that governments create. This legitimization will speed up Bitcoin's integration into the global financial system. We can expect more regulated products, more banks offering crypto custody, and more businesses accepting Bitcoin. The institutional domino effect will likely be massive. This policy also also signals a major shift in the US regulatory mood. The era of adversarial enforcement actions may be giving way to a more pro innovation stance, with the administration aiming to make the US the crypto capital of the world. By setting a clear framework for its own holdings, the government is setting a precedent for the entire private sector. This is the moment that Bitcoiners have been talking about for years. The moment the game theory kicks in at the highest level. The government tried to ignore it. They tried to regulate it out of existence. Now they are joining us. They are becoming the largest hodler of last resort. It's not just validation, it's a victory for the idea of a decentralized, non sovereign store of value. The irony is beautiful. The asset created in response to the 2008 financial crisis, born from distrust of centralized control, has now been embraced by the heart of that system as a strategic necessity. We are breaking down one of the most significant events in modern financial history, and we're only scratching the surface. If you're getting value from this analysis and want to stay ahead of the curve on how crypto is changing the world, do me a favor and hit that subscribe button and turn on notifications. The financial landscape is being redrawn in real time, and you don't want to miss what's coming next. This executive order is about way more than just finance. It's a calculated move on the grand chessboard of global geopolitics. By establishing the strategic Bitcoin reserve, the United States isn't just validating Bitcoin, it's weaponizing it. It's firing the starting gun on a global crypto arms race, a new kind of competition for digital supremacy. For decades, American power has been tied to the dominance of the US dollar, but we live in a world where that dominance is being challenged. Nations like China and Russia are actively working to de-dollarize. Against this backdrop, the US embrace of Bitcoin looks like a strategic masterstroke. It's a move to counter rivals and reinforce American leadership in the next generation of financial technology. By declaring its intention to be the crypto capital of the world and backing it up with a massive permanent Bitcoin reserve, the US is planting its flag on the digital frontier. It's leveraging a neutral, decentralized protocol to strengthen its own geopolitical standing. If the world is slowly moving toward a new financial standard, the US just made sure it's the biggest player at the table. This forces the hand of every other major nation. China, despite its crypto trading ban, holds a massive trove of around 194,000 BTC from the Plus token seizure. Will they now be forced to formally declare it a reserve asset to keep pace? What about the European Union, Russia, or India? Can they afford to sit on the sidelines while the US locks down a strategic position in the world's best digital collateral? The game theory is powerful. When the first superpower makes such a big move, it becomes exponentially riskier for others not to follow. A new era of crypto reserve competition may be dawning, much like how nations competed for gold in the 20th century. We're already seeing the ripples. Smaller nations have been experimenting for a while. El Salvador made Bitcoin legal tender. The nation of Bhutan has been secretly mining Bitcoin using its abundant hydropower. But the US entering the game changes everything. It takes the idea from a niche experiment to a core part of national strategy. Now, governments worldwide will be eyeing their own potential Bitcoin sources. It's estimated that there is over $75 billion worth of crypto tied to illicit activities globally, just waiting to be seized. Every nation's treasury department is now a potential Bitcoin acquisition vehicle. The race is on. This creates a fascinating dynamic. The very asset designed to operate outside the control of nation states is now becoming a critical element of statecraft. Its fixed supply of 21 million coins means this is a zero-sum game. Every coin the US government locks away is one that another country can't get. This scarcity will fuel the competition, creating powerful long-term demand that has nothing to do with retail or institutional speculation. The US is making a bet that in the 21st century, economic power will be measured not just in dollars and gold, but in bits and sats. Creating a strategic reserve of over 200,000 Bitcoin is one thing. Keeping it safe is another challenge entirely. The executive order is essentially calling for a digital Fort Knox, a custody system strong enough to protect a multi-billion-dollar national treasure from every hacker, rogue state, and insider threat on the planet. This is a huge technological lift, and it comes with serious risks. The Treasury Department is now tasked with creating an office to manage these assets. This isn't like storing gold bars in a vault. Bitcoin exists on a global, decentralized network. Securing it means mastering digital custody, and the core of that challenge is managing the private keys, the secret data that proves ownership and lets you move the Bitcoin. If those keys are lost, the Bitcoin is gone forever. If they're stolen, same result. To pull this off, the government will almost certainly use the most advanced security available. This will include cold storage, keeping the private keys completely offline to shield them from hackers. They will also use multi signature wallets, a feature that requires multiple independent keys to approve a transaction. Think of it like a bank vault needing three different people with three different keys to open it. This prevents a single point of failure. The physical security will be just as intense as the digital. The hardware devices holding the keys will likely be stored in highly secure secret locations, maybe even underground bunkers, protected with the same level of security as the nation's nuclear codes. However, crypto history is filled with stories of massive exchanges getting hacked. While the government has far greater resources, the threat is real. This digital Fort Knox will instantly become the number one target for every state sponsored hacking group and cyber criminal organization in the world. There's also the risk of technology becoming outdated. Will today's custody solutions be secure against the quantum computing threats of tomorrow? The government has to build a system that can adapt to future threats. And finally, there's the human element. The protocols must be designed to be resilient against human error, coercion, and insider threats. The success of the strategic Bitcoin reserve hinges on the practical ability to hold it securely forever. It's a massive test for the US government, one it can't afford to fail. While the crypto world is celebrating, this move isn't without fierce critics and major controversies. To get the full picture, we have to look at the arguments from the other side. First, there's the ideological pushback from within the Bitcoin community itself. The original vision for Bitcoin, laid out by Satoshi Nakamoto, was for a decentralized currency free from government control. For many Bitcoin purists, the US government becoming the largest whale and centralizing its holdings is a betrayal of that original idea. They argue that instead of Bitcoin freeing people from the state is absorbing Bitcoin to increase its own power. Second, there are serious economic questions. Many traditional economists doubt that Bitcoin can really function as a strategic reserve like oil or gold. The Strategic Petroleum Reserve can be released to lower gas prices. Gold reserves can be used to settle international debts. Critics argue that Bitcoin for now can't do either. Its main function in the reserve is just to sit there, making its strategic use unclear. Then there's the volatility. Bitcoin is famous for its wild price swings. By holding on to tens of billions of dollars worth of Bitcoin instead of selling it, the government is taking on a big financial risk. Critics argue the responsible thing to do would be to sell the seized assets for public revenue, not gamble on the future price of a volatile asset. Third, the policy is tangled in political controversy. There are questions about potential conflicts of interest, as some officials are known to be significant personal investors in cryptocurrency, and this order directly benefits them financially. This politicization also creates long term uncertainty. What happens if a future administration with a different view takes power? Could they reverse the order and sell off the reserve? That potential for a policy U turn remains a major long term risk. These criticisms aren't trivial. They touch on Bitcoin's fundamental identity, the economic wisdom of the decision, and the political integrity of the process. While many are celebrating, it's important to see that this move forces Bitcoin into a new, more complex, and more contentious arena. So, we've talked about geopolitics, economics, and government policy. But what does this all mean for the average person, for the retail investor who has been patiently stacking sats for years? In short, this is arguably the most powerful bullish signal you could ever ask for. For years, the biggest risk to Bitcoin wasn't a technical failure. It was the threat of a major government crackdown. The fear that the United States, to protect the dollar, would try to ban it. This executive order dramatically lowers that existential risk. The government is not likely to ban an asset it has just labeled a strategic national reserve. This provides an unprecedented level of long-term certainty for every Bitcoin holder. You now have the ultimate whale, the United States government, on your side of the trade. They've aligned their national interest with the long-term success of the Bitcoin network. The most direct impact for you is on supply and demand. By taking around 200,000 BTC and locking it away with a never sell policy, the government has created a massive supply shock. That's a huge number of coins being taken out of circulation, just as institutional demand is expected to ramp up. Basic economics tells you what happens when supply is drastically cut while demand skyrockets. The price has only one long-term direction to go. This policy effectively creates a powerful psychological price support for Bitcoin. The government's holdings act as a stabilizing force. While short-term volatility will always be a factor, the knowledge that a huge chunk of the supply is locked in unbreakable hands provides a strong backstop against catastrophic price collapses. It gives every other investor, big or small, more confidence to hold for the long term, knowing the most powerful entity in the world is hodling right alongside them. For those of you who've had to defend your decision to invest in Bitcoin to skeptical friends and family, this is your ultimate I told you so moment. You can now point to an official White House document and say, the US government agrees with me. It shifts the perception of Bitcoin investing from a fringe, speculative bet to a prudent long term savings strategy that's aligned with national policy. So, for the retail investor, this news should inspire a profound sense of confidence. The thesis that so many of you have held for years, that Bitcoin is the best form of savings the world has ever seen, has just received its most significant endorsement. The government isn't just a participant anymore, it's a strategic partner, and that changes everything for the future value of your holdings. What we've witnessed is a monumental shift. On March 6, 2025, the United States government didn't just accumulate Bitcoin, it legitimized it on a global scale. Through a single executive order, it transformed the world's top cryptocurrency from a fringe asset into a strategic cornerstone of national power. We've covered how this order creates a permanent strategic Bitcoin reserve, a digital Fort Knox funded by a massive treasure chest of over 200,000 coins seized from hackers and dark web markets. We've looked at how this move serves as the ultimate validation for Bitcoin, potentially unlocking a wave of institutional investment and cementing its role as digital gold. And we've explored the huge geopolitical implications, kicking off a global race for nations to accumulate this scarce digital asset. This is Bitcoin's game theory playing out on the world stage. It's the story of how a decentralized open source protocol created by an anonymous programmer grew so powerful that the most dominant nation on earth chose to adopt it as its own. It's a testament to the power of mathematics, scarcity, and a network that answers to no one. The writing is on the wall. The world's financial system is changing, and Bitcoin is at the center of that transformation. The US government's decision to become a permanent holder of Bitcoin is a signal that will echo through financial history. But now I want to hear from you. What do you think of this historic move? Is the US strategic Bitcoin reserve the most bullish event in Bitcoin's history, confirming its destiny as the ultimate store of value? Or is it a dangerous step, centralizing a decentralized asset and pulling it into the messy world of politics? Let me know your honest thoughts in the comments below. If you enjoyed this analysis, please give this video a like and make sure you're subscribed with notifications on. We're entering a new chapter for Bitcoin and global finance, and this is the place to stay informed. Thanks for watching.